Hi everyone, welcome to a Monday market update. Market moving higher, but I just want to express to everyone to keep level-headed, stay objective, and be patient. Bitcoin hasn't done anything just yet. In fact, it closed beneath the 200-day moving average this morning, and now it's trying to run back above it again. So some whale games, derivative action, just stay level-headed, wait for some constructive closes. That said, I'm seeing a lot of positivity now developing in the macro, which give us a nice lead into Q2. So that's my thesis. Q2 is going to be a lot better for this market than Q1. And it's probably easier to say because Q1's been just such a shocker. But Q2, with M2 expanding, we've got potential rate cuts coming in Q2 as well. I think it's going to be a lot better for this space. And it's not going to take too much for us to go higher, just based on the amount of sell pressure that we've absorbed through the entire market, not just Bitcoin. All right, let's get into some quick points, then I'll get into some charts for you guys. So we have a Fed meeting coming up over the next 2 days. Now, it looks like rate cuts will be held on hold. I think that's pretty obvious at this point. However, what I think we can be laser focused on is the communication coming from Fed or any federal governors that go on CNBC and start talking, shooting their mouth off about the path that they see this going, because inflation is falling quite markedly now. GDP is stabilizing. In fact, it's growing. This is the environment to actually, now you can probably get more aggressive with cutting. Trump wants yields lower. Trump wants a lower dollar. This is how you get it done. But they're very data dependent now, the Fed. So we just need to pay attention to this and wait for communication. I think they're going to start giving us a little indicator that they might stop QT. Rate cuts are likely coming in a greater frequency, and we're going to get that federal funds rate a bit lower. We go, because there's a break in April, we go out to May for our next one. We're beginning to see some money come in at 27.2%, that we're going to have a rate cut of 0.25%. So that's a positive for the market. If we start to see this being priced in any sustainable way, these can fluctuate quite a bit, so it is dependent on the data coming out from here. Then we've potentially got 2 rate cuts coming in a month later overall. So that could be very interesting, but I think we can use the 10-year US Treasury yield as a guide. That is essentially, same with the lower yields, forecasting out where the market is seeing the federal funds rate in the near future. So I think it's around 4.3% currently. I'd like to see that lower, maybe about 4% before we see a cut. So that's kind of my guidepost. Here's a bit of good news, and this should give us that Q2 bump that we're looking for. So US money supply growth is accelerating, rose 3.9% year over year in January, the fastest pace in 30 months, 11th straight month of money supply expansion. Amount of US dollars in circulation has reached 21.6 trillion. Now, the world is hungry for dollars. There is a massive shortage of dollars, but we know crypto and Bitcoin and risk markets in general runs on liquidity. It just goes higher. That liquidity finds its way into the market. So we pay attention to this. This is a great sign. With a lower dollar too, China can now reignite their expansion plans, the global M2 expansion. So this is just the United States. Outside the United States, global M2 is now ripping really hard. And I would say the United States is probably the last rung in that ladder that is going to start sending us higher. So again, this is all about path and where we see the market going. And in the back end of this year, it looks much, much rosier for these markets. So if we look at global M2 here, you've got Bitcoin in the candlesticks here, BTS USDT as perpetual contract. So this is just telling you the futures. What we're really just looking for here is correlation. If we see in the red here, this is global M2, the liquidity index there. When global M2 is correcting, so it reaches a bit of a bottoming phase, Bitcoin is also bottoming out, finding the low prices. We see on the upside too, so just show you the bottoms there, Bitcoin's correcting or bottoming right here where we are again, bottoming. M2 just ripping off to the heavens, ripping every time Bitcoin runs after those corrective phases. And again, it's not like an instant thing, but Bitcoin correlates very, very well to M2. In fact, this is probably a really good chart here. With Bitcoin correcting here, M2 is actually front running it, which Bitcoin will catch up to. And I'm watching gold as well, quite exclusively. Gold and Bitcoin have this sort of take turns relationship. Gold just reached an all-time high of 3,000 US dollars, and gold will have a pullback. When gold tends to pull back, Bitcoin tends to rip. In this environment, they're both very fundamentally driven on the expansion of liquidity. So that's what I'm looking for. I think things are about to heat up, but again, I think we just need to just stay sober and just be very very patient with the technicals. But as a longer term investor, I'm just buying Bitcoin. Anything below 90,000, I'm just buying. It just makes a ton of sense. So if we get a close above the 200 and the 10 and the 20, so around about 85, 86,000, that's where things get spicy again. So 82,000, that's the guidepost. Below 82,000 on a close, we're likely exploring those 70,000 region levels. So back down to here, I think 73,000 looks right, but way too obvious. So hopefully that doesn't get hit. If it does, fine. It's an opportunity for us investors to buy more and deploy extra powder. Above 86,000, it's likely we're going to test out 92,000. Above 92,000, we're probably going to new highs. So that's the way I'm structuring it in my mind. You can get more aggressive as levels get retaken, resistance flips into support. Here as well is probably a very interesting area. So 87,000, if we get rejected here, it's likely we're then going down to do the low and then that's over. But if we're just climbing a wall of worry through here, we could oscillate, come back down and retest that 200, use it as a support base, and then move higher. That could be an absolute case to play here. Right now, no cryptos really look fantastic. They're all trying to bottom and move higher, but if Bitcoin loses its footing, they all roll over. And there's not too many cryptos that look good as well against Bitcoin yet. I'm really waiting and being patient for the breakouts against Bitcoin from the altcoins before I move into. There are times when you are offensive and there are times when you're defensive. It's kind of all about timing and waiting for those triggers to come to you via alerts and just what you're seeing on the chart. There's no reason you should be just going, say, all in on one green candle when you're not really understanding the broader concepts or have a larger plan. It's really important that you do recognize that. And yeah, go from there. So guys, I hope you have a wonderful day. We'll catch you again soon. Take it easy. Bye.